Good day, ladies and gentlemen, and welcome to the Q2 FY23 earnings conference call of Exide Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Aditya Jhawar from Investec Capital. Thank you, and over to you, sir.
Yeah. Thank you. Good afternoon to you all. From Exide Industries, we have with us today MD and CEO Mr. Subir Chakravarti, our Director of Finance and CFO Mr. Ashish Kumar Mukherjee, President Legal and Company Secretary Mr. Jitinder Kumar, and Head Investor Relations Ms. Chavi Agarwal. Before we proceed, here is a disclaimer for the call. Few statements made by the management in the call may be forward-looking, and we request you to refer to the disclaimer in the press release for further details. We'll start the call with a brief opening remark from the management, followed by Q&A session. I would now like to invite Mr. Subir Chakravarti for the opening remark. Thank you. Over to you, sir.
Thank you, Aditya. Good afternoon, everyone, and a warm welcome to the call. Hope you all are doing very well. Firstly, I would like to thank all our stakeholders for the continuous support and trust they have shown in Exide. If I look at the last few years, we at Exide have been continuously working to be more agile, innovative, efficient, and technologically advanced. And this is reflected in our resilient business model and our future-ready product portfolio. We continue to be a leading player in the lead-acid battery space and have always focused on delivering profitable growth. Looking at the previous quarter, I would start by talking about the demand scenario. Overall demand was upbeat in most of the sectors to which we cater. On the automotive side, the replacement market continues to grow, and demand from OEMs started recovering as the semiconductor supply situation improved. In the industrial division, overall pickup in business activity and increase in capex by public and private sectors led to good order inflow. Coming to financial performance, I believe it was a very good quarter for us. We clocked 13% year-on-year growth in sales in Q2 FY23, and EBITDA was similar to last year in absolute terms, despite high input cost inflation. Although margins were impacted on a year-on-year basis, we have reported a sequential improvement in the margins in the quarter as high raw material prices started softening. For the first half of the year, our performance is very healthy, with sales and profit before tax growing at 32% each. Our effective cost optimization initiatives have helped us lower our fixed costs. Total fixed expenses were 19.4% and 18.7% respectively of sales in Q2 FY23 and H1 FY23, down from 20.2% in Q2 FY22 and 20.5% in H1 FY22. One area which I would like to highlight is digitalization initiatives taken across operations. Our digital journey began 2 years ago, and so far digital processes have infiltrated various critical departments, including sales and customer service, supply chain, and human resources, among others. These initiatives have enabled us to deepen our customer engagement and make our sales force more efficient and target-oriented. Our supply chain costs have lowered and accuracy has increased significantly. We continue to maintain a very strong balance sheet with zero debt, equity, and a high liquidity position. Moving on to the first half cash flow, the company generated 1,007 crores of cash flow from operations. Our profits, along with prudent working capital management, support our cash flows. We have a very strong financial base, which I believe is extremely critical. This will not only enable us to capitalize on opportunities, but will enable us to ride through tough times if they arise. Talking about the near term, though we are optimistic, we are also carefully evaluating various scenarios at the same time. While we expect overall demand to be healthy, any exogenous factor or geopolitical tension can impact the demand and the supply side situation in the sectors to which we cater. We further expect sequential margin recovery to continue, supported by some respite in input costs. However, I'd like to mention that raw material costs have again started increasing. Moving on to the lithium-ion cell manufacturing plant, which we are setting up under our wholly owned subsidiary, Exide Energy Solutions Limited. We have recently done the Bhumi Pujan ceremony on our project facility near Bengaluru Airport, and all necessary approvals are underway. Our senior management team hiring is almost complete, and we are on track to complete the first phase within earlier proposed timelines. This concludes our update for the quarter and half year. With this, I close my opening remarks. We will now be happy to take your questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. My question pertains to the cell manufacturing capacity which you are putting up. So can you talk more about it with respect to what will be the initial capacity which we start with and the ramp-up timelines and effective capex for the same for which will be incurred in FY23 and 24 for cell manufacturing plant?
So thank you for your question. So the plant is being set up on roughly 80 acres of land, and it is being conceptualized in 2 phases, phase 1 and phase 2. So in phase 1, we will have 6 gigawatt-hour of capacity, and phase 2, another 6 gigawatt-hour of capacity. So we expect the phase 1 SOP, start of production, sometime in 2024. So that is the plan. The overall capex for the plant is 6,000 crores, of which around 4,000 crores will be spent for the phase 1 and the balance for phase 2.
Okay. And when we start phase 1, it will start directly with 6 gigawatt-hour capacity or?
Yes.
Okay. And any indication on the kind of interest which you are getting for the 6 gigawatt-hour capacity, given that will be starting in 24? So have we started getting RFQs or interest from potential customers?
The answer is yes, because we expect that we would be one of the first players to kickstart a multi-gigawatt-hour lithium-ion facility in the country. And this has generated a huge amount of interest amongst all the OEMs and other players. And we already have started to do a reach-out exercise with potential customers who are well known to us, because we have been in this market for 75 years with lead-acid batteries. So the customers, we have deep customer connects, and we are well placed to service their requirements.
Got it. And assuming demand is not a constraint, how soon can we reach to 6 gigawatt-hour of manufacturing? I mean, what I'm trying to understand is how is the ramp-up timelines for such capacities, given that it will be the first in the country? How long does it take to ramp up to full capacity that way?
See, we expect, as I said, SOP sometime in 2024. Expectedly now in the third quarter or so, third or fourth quarter, around that time. Actual this first phase full scale production that you are asking, this will get stabilized, I expect, towards the absolute latter half of 24, 25, and the stabilization of this process will happen in 25, 26.
Okay, got it. And second question pertains to our core business of lead-acid batteries. So, have we seen over last few years, 2-3 years, increase in share of organized players and for Exide as well in the replacement market side?
Sorry, I could not get your question.
Has market share of organized players and Exide gone up in last 2-3 years, and salience of unorganized, has it come down in that time frame, or it has been broadly stable over last 2-3 years?
The organized sector, I would imagine, would have gained shares, but Exide has been gaining shares rapidly in the market, not only against unorganized players, but also against organized players in almost all segments.
Okay. Because if I look at our margins both on gross and EBITDA side, and that too for our peers, over last few years they have been coming down despite increasing consolidation in the industry. So how do you read that margin evolution versus consolidation in the industry, and do you expect normalized margins to again go back to that 14-15% range from where we are today? I understand RM cost has gone up, but in the replacement market, I believe we have a good pricing power. So, in that context, if you can share your thoughts.
See, your question is on a relative basis or on an absolute basis?
Absolute basis.
See, on an absolute basis, I can tell you that we have seen an environment where raw material costs have continuously gone up. In fact, there has been a monotonic increasing phenomenon across all raw materials, not only lead, separators, everything, plastics. So in such an environment, what happens is that you of course do your price increases, but then the price increases are based on past data, which means that let's say you do a price increase in this month, obviously you factor in the costs of the last 3 months or 6 months and so on. But then in a situation of monotonic price increase, which has happened, by the time you take the price increase or adjust the prices, the raw material costs have pushed up again. So again, you need to take a subsequent price increase. So this has been the phenomenon in the last 2 years because of non-stability of the raw material prices. So while we have adjusted prices, but there has been a time lag. Now, your question as to when we can go back to that 14%, the answer is quite simple. Once the prices stabilize, it will take about 3 to 6 months for the situation to actually come to a steady state level, and from then on, the earlier margin should be possible.
Got it. Thanks, sir. I'll fall back in queue.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all participants, I request you to please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We have the next question from the line of Siddharth from Nomura Group. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So again, the first question on your lithium-ion plans. So on the customer side, will it be possible to guide us like which segments you are essentially targeting in the first phase, like 2-wheeler customers, 3-wheelers, or the cars? So some broad segment indication will be very helpful.
So we are targeting all customers. As you know, in lead-acid space, we have a very wide product portfolio. Similarly, also in lithium-ion space, we are targeting 2-wheelers, 4-wheelers, e-rickshaws, stationary applications, all customers.
Okay. And the capex, how do you plan to fund it? Will it through the investments we have, in shares, or how do you plan?
I am requesting our CFO, Mr. A.K. Mukherjee, to answer that question.
So, capex, you mean for the core business or for the lithium ion?
For the lithium ion, capex of 6,000 crores.
So, lithium ion in the phase 1, there will be 2 phases, of course. The phase 1 will be approximately 4,000 crores, and phase 2 will be another 2,000. So, total is, as of now, estimated at around 6,000 crores.
Right, right. Yes. But in terms of the funding, sir, if you can help us with that.
Financing, it will be largely from internal accruals, from equity infusion, I mean from Exide. And whenever we require any bridge financing through the borrowed funds, we'll take it from banks, etc. Okay.
No, I meant that we have an HDFC Life as an investment. So would we look to monetize that opportunity for this, or look to do it for internal accruals only?
See, as I said, that it will be largely from internal accruals only. So we really don't need the HDFC Life asset for this investment. So in any case, there will be a lot of investments requirement in future also. So as of now, there is no such plan in monetizing this.
And the base lead acid business, how much capex should we assume there to be there every year now?
Lead acid business, of course, will not compromise any capex requirement for the core business as well. It is difficult to quantify, but it is approximately it will be around 400 crores to 400 to 500 crores per year.
Okay. Got it. And again, on the base business, sir, if you can highlight for the quarter in terms of growth, auto and industrial, how was our growth in these segments, and what is your outlook for the rest of the year, if possible?
See, we have grown very handsomely, as you have seen. There is a 32% growth in sales and 32% growth in PBT as well. So there is very robust demand across all segments, and we are taking advantage of that situation. We don't see any lack of demand in lead acid space as of now. Okay. In fact, as you may have seen, all the many, I will not say all, many of our customers who are manufacturing four-wheelers and so on, they have earmarked capexes for the traditional internal combustion engine kind of technology. So there is good growth happening in the traditional space, and we are well poised to take advantage of that situation.
Will it be possible to share the capacity currently in two-wheeler and four-wheeler batteries and industrial, and any expansion you are planning to take in any of these in the next 1-2 years?
See, we have right now adequate capacity to take care of our requirements. Our capacities and so on are mentioned in our annual report, so you can take a look at it.
Okay. And expansion, sir? Any particular area we're looking to expand, or?
Expansions, right now we have adequate capacity to take care of the present requirements. However, there are areas where we need to look at fine-tuning the product portfolio, or to introduce some new products and so on and so forth. So therefore we require capexes, but right now we are not planning any greenfield facility. Whatever is happening is on incremental basis, on brownfield basis.
Okay. Possible to quantify that, sir? That will be the last question.
Quantify what?
Quantify the expansion which you are planning to take.
These are, as I said, brownfield expansions, capacity unlocking, or debottlenecking. Those kind of activities are going on.
Okay, sir. Thanks. I'll come back in that one.
Thank you. We have the next question from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi, sir. So in this quarter, we have grown almost 13% YOY. Can you provide breakup of volume and value growth in this?
See, basically, it has been a double digit. We do not actually quantify exact segment-wise figures, but it has been a double digit growth in both volume and value.
But if the overall sales growth is 13% only, and there is a lead inflation, other inflation as well, then volume growth, I mean, OEM has done very well. We know that from the market, but then is it really that we've grown double digit across all segments in the volume side?
Not very clear. If you can just.
No, if I look at there's a 13% growth overall in sales, and there is a lead inflation as well versus last year. So if we have grown double digit in terms of volumes, then probably value growth will hardly be 3%, which appears to be lower because we have taken multiple price increases over last 1 year. So can we quantify, I mean, industrials or maybe auto broadly, what kind of volume growth you have seen?
So there is no uniform volume growth in all segments. There are few segments were up and few segments were down. So overall, if you see the volume, then it will be close to double digit. And but there are pluses and minuses in different segments.
Okay. And secondly, on this next charge, your subsidiary, have we done any sales from there this quarter? And basically, how much is sales from there, and which segments we're catering to as of now from that next charge?
The next charge production has just started, so it will take some time for it to stabilize. As you know, the next charge facility does not manufacture cells. It imports cells and makes modules and packs. So that effort has just started. And as you may have seen in our declaration very lately, that unit has become 100% subsidiary of Exide now. And so I think going forward, once this production stabilizes, then things will move forward at a faster pace.
But as of now, in terms of development work that we have already completed, which segments of product basically we're going to launch from there?
See, we have launched products for buses, and we have launched products for the telecom sector, and also for two-wheelers. But as I was telling you, these are not with our cells.
Yeah, that I know. We have to import cells and make battery packs.
This unit, the full leveraging of it will only be possible or will be realized once we start manufacturing our own cells. This is something which we have done earlier in order to understand the market and understand this lithium-ion technology and and the rest of it. So that was the objective of this exercise.
Okay. And lastly, we have done 612 crore capex in the first half in consolidated, basically. So can you provide breakup of same in terms of lead acid obviously will be part of standalone, which is around 160 crores. But remaining is what exactly? Is it lithium plant or your lead smelting? What is the capex numbers?
Capex in the first half is about 160 crores, 156 or so for core business. And you are saying 600 crores. I am not sure which.
Consolidated number, consolidated balance sheet if I look at in the cash flow statement, there is 612 crore capex in the first half. Concall I am talking about.
That I think includes our investment in the ESL, that new lithium-ion cell.
Yeah. So just want to break up of that. Is it remaining of like 612 minus 160 is completely that?
Yeah, it's primarily on account of land and technology.
Okay. Thanks a lot.
Thank you. We have the next question from the line of Shubham Agarwal from Equitas Investment. Please go ahead.
Yeah, thank you for the opportunity. So firstly, I wanted to understand for our base business, what is our current capacity utilization?
Current asset utilization?
Yeah, capacity utilization, yes.
Okay, capacity. Capacity, we are clocking anything between 85 to 90% at this point in time.
And sir, for this quarter, if we see sequential growth in terms of revenue, so we reported close to 3% decline compared to one of our competitors, which reported growth in sales Q on Q. And earlier in the call, you mentioned that we have been gaining market share. So can you briefly explain what is the reason for this?
So can you repeat the question, please?
Yeah, so sequential growth in terms of revenue, we reported a decline compared to Q1. And if we compare this to one of the listed players in similar space, they reported a growth Q on Q. So what is the key reason for such?
I'll explain. The sales composition, our sales composition is not exactly identical to the sales composition of our competition. We are, for example, very heavily into the inverter batteries or the home UPS batteries. The home UPS batteries actually in the second quarter, they always show a decline. So traditionally, second quarter first quarter is always much better than the second quarter because of the composition of the kind of sales that you have got. So this has nothing to do with gain or loss of market share. Gain or loss of market share that I am referring to is, in the vehicular space or in the two-wheeler space and so on and so forth. Those are the areas where there has been a growth in market share. But the HUPS segment is so heavily skewed that, it makes a difference between quarter one and quarter two. And all along, if you look at our results, it will show the same kind of trend.
Got it. Fair enough. So now coming to the Exide Energy Solution subsidiary. So in our lithium-ion project, what as per you is the biggest challenge for executing this project? Because we are going through a technological transformation. So what are the key areas that you are facing challenges and how you are addressing it?
See, the challenges are basically, of course, you have stated it's a new technology, but we have taken adequate safeguards in terms of, you have to understand one thing that, many people ask us that you have invested in this next charge, then again you have invested here. So you have to understand the flow of logic, which is precisely this, that, 3-4 years back when people were talking about lithium-ion, we discussed and debated and decided that the best way to actually wet our feet is to get into it. And getting into cell manufacture was too big a risk at that point in time. So we decided we'll get into module and pack making, which is why we invested in this company, in this unit, because it was a good way to understand this technology. Because once you start doing modules and packs, first of all, you understand what it takes to make modules and packs. And secondly, you also have discussions then with cell manufacturers and you understand about cell manufacturing as well. So this was really a kind of initial step which we took. And after that 3-4 year phase, unfortunately, those years were also marred with pandemic, so it slowed us down. But today we have a very good understanding of what it takes to manufacture lithium-ion cells, which is not the same case with the other players who are today trying to get into this space. Because let me tell you, module and pack making technology, it looks very simple, which is why you have so many units who are using sellotape and screwdrivers to make these modules and packs, and the end result of what is happening in the marketplace because of ill-conceived modules and packs. So if you ever visit this plant, you will see how sophisticated a plant can be in terms of climate control, in terms of robotics. So it's a fully automated plant. So it took us some time to understand this because in India you don't have this kind of experience at all, whether in the talent group or in the equipment space as well. So now we have a fairly good understanding of lithium-ion cell manufacturing technology. So that is why we have, now we took this major step, which involves a lot of capex as well, of getting into cell manufacture. And today we are very well poised for a couple of reasons. One is we are today very well informed. We know exactly what, and in our choice of partner and so on and so forth, we had a fairly good understanding because we had that head start, which others unfortunately do not. Number one. Number two is the major challenge here is to actually stabilize production. Now we have an all-comprehensive technology agreement with Exide where they will be, assisting us on a turnkey basis, setting up the plant and assisting us in the initial days of the production. So we expect to have the same level of, productivity and production and so on and so forth on par with Exide, who are today within the top 10 players in the world. The next challenge is the supply chain, because any small player will not be able to command the same kind of pricing from the raw material suppliers. Now, supply chain is also tied up in this agreement. Okay. So, to cut a long story short, we can ride piggyback on Exide on the supply chain, which is a major advantage. Okay. The third thing is customer connect. Again, because we have been, with the OEMs and other major customers in the energy space for the last 75 years, we have very deep customer connects. So these are some of the things which we have tied up, which have come to our mind, and we are adequately tied up. So we hope, this will place us on a very good pedestal. And last but not the least, as I have said earlier also, I think we will be one of the first players in the multi-gigawatt-hour lithium-ion space. Because our state of readiness is very high. We have already done the Bhumi Puja, already the construction activity is on, the approvals which are necessary, those are being worked out. So we expect we will be one of the first few players. Again, I am saying in the multi-gigawatt hour space, not in 250 megawatt kind of, those there are one or two players doing that. Yeah. So first mover advantage, let me tell you why this is important. The first mover advantage in this particular area or space is immense, because it takes 1 to 1.5 years for the homologation exercise with any customer. This is not just a battery to start the car. This is a battery to move the car. And therefore, it takes a lot of time and effort to actually homologate any product with a customer. It takes about 1 to 1.5 years. And I do believe that Exide will have that head start. So anyone who wants to compete will have to give that time, 1 to 1.5 years to get their products approved. So therefore, I think we are very well poised in this space, and starting 2024, whenever we start production, I think we will not see any dearth of demand. That I can clearly see at this point in time.
Got it. No, sir, thank you for your answer. And just if you can briefly also touch as to why our plan was not selected in the PLI scheme?
Well, again, as I said, we were very well informed. We knew what it takes to actually get into this area. Now, the people who competed with us, they did not have this information. They were attempting to get into PLI based on whatever information they had, but I strongly believe we had a far deeper level of information. Therefore, whatever we bid for was practical and something which was achievable, both in terms of, indigenization and some of the other things. Even to set up a plant, to set up a 10 gigawatt hour plant, what it takes, is something that you only get to understand once you are deep into that exercise. So I believe we had that information, and therefore we bid for something which we thought we could do, not something which we could not, not something which was in the air. But again, I don't wish to comment on the others who have bid for it. I wish them all luck. But this is not an easy game. That's all I can tell you.
Got it.
We are not that. Let me put it this way. Of course, it would have been nice to get the PLI, but again, at the levels at which we bid, it's neither here nor there. It will not severely affect our profitability or anything else.
Got it.
Another thing, let me tell you, if you bid aggressively and you are not able to fulfill, there are penalties associated with PLI.
Okay. So my only concern is, given that they have bidded so strongly, and if we see total plan in the market, it is more than 100 gigawatts. And as per your presentation, the demand by 2030 will be just 68. So there's a question mark as to the viability of most of the projects.
Mr. Agarwal, can you please take a follow-up question with us, because we have many other participants who are waiting for their turn.
No problem. I'll join that.
Thank you. We have the next question from the line of Aditya Jhawar from Investec Capital. Please go ahead.
Yeah, thanks for the opportunity. So my question is that in our lithium-ion cell manufacturing facility, what is our plan to, to scale up the manufacturing to in terms of more value-added things, in terms of supplying modules, supplying battery management system? I believe that it could also have a bearing on overall margin profile of this entity. And what is our target margin, EBITDA margin that we are looking at from this facility?
So, as we have already declared, it's a multi-chemistry, multi-format plant. So initially we are looking at NCM and lithium iron phosphate, so these two technologies. And in terms of format, we have the cylindrical cells, we have the prismatic cell, and we have also envisaged blade at some point in time. So it is the largest possible cross-section of product variant that one can think of, which we are planning for this plant. So scaling up, depending on the, first initially it will be 6, and then another 6. And then from then on, depending on the demand and how things shape up, we can scale up more, although it will have to be in another location, because this area can only accommodate maximum of 12 gigawatt hours. Okay. In terms of margins, we strongly believe that margins should not be very different from what we earn for lead-acid battery business. So it will not impact our overall margin situation.
Okay. Sir, and for our, Prantij facility, what is the current, utilization level? And if you can give some, flavor that which are the clientele we are servicing both on the automotive and the industrial side, and what is the margin expectation from the Prantij facility?
The Prantij facility, as I have explained earlier, you have to understand one thing. Value addition is 70% with the cell, 30% with the module and pack. Okay, so this is not a lithium-ion cell manufacturing plant. This is only a module and pack making plant. And therefore, as I have said, the idea is to basically get to understand the module and pack making and how it works and so on and so forth, and then to homologate some of the products with our customers. And in terms of customer base, we have got a very diversified set, starting from buses to four-wheelers to two-wheelers, also in the stationary space. In fact, we have launched an inverter called the Integra, which is actually sold by Exide but manufactured at Prantij, which is with lithium-ion cell. So therefore, this is an exercise. This plant is only 1.5 gigawatt hour. Now, as far as the Bangalore plant is concerned, there we will be having the balanced module pack making facility. This also we will use, and the balance which will be required, that will be set up in Bangalore along with the cell making plant. So this will kind of act together. So this is the plan right now.
Okay. So my final question is, sir, considering the shift from 4G to 5G in the telecom space, are we seeing some inquiries for lithium-ion batteries in the telecom space, and how far are we from delivering the solution for telecom?
5G, let me tell you, as far as 5G is concerned, 5G has two kinds of towers. Now, they have the towers. First and foremost, 4G and 5G will be separate towers. They will not be the same. This is the information that we have got, but things can change because it's all a little fluid. what information we have got from the telecom companies is that the 5G towers will be separate, and 5G will also have rooftop, last mile connectivity kind of thing. Have rooftop smaller towers or transmission units. Now, the ones which are non-rooftop, they will be taking the standard, 300 ampere hour kind of VRLA cells. So far, that is the indication. But the rooftop ones, they have right now they are taking the 12 volt, 42 ampere hour VRLA cells. That is the indication that we have got, and we have supplied a bit in this space. Going forward, this rooftop kind of thing, the smaller towers, they can accommodate lithium ion. That is suited for lithium ion actually. So going forward, this could, accommodate lithium ion as well. But this is what the 5G rollout. But 5G rollout is still at a very incipient stage right now. It will take some more time.
So, thank you, sir. All the best.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. We have the next question from the line of Pramod Amte from Incred Capital. Please go ahead.
Yeah, hi. Thanks for this opportunity. So, first one is
Mr.
with
Amte,
regard.
you're not audible. I would request you to kindly use your handset to ask a question.
Is it better now?
Yes, please proceed.
Yeah. So basically, with regard to your next charge, with now you buying out the entire stake of your partner, will there be a commitment to supply or source cells or whatever future requirement for your plant going forward from the partner, or you will be on your own to find it out and trace it as you go forward?
We have absorbed all the technology already, and so there is no issue actually. And we are not sourcing any cells from there in any case. They have a very small plant, in fact, a 250 megawatt hour plant, and their cells are not cost competitive as far as India is concerned. So we are not sourcing anything from there in any case. Sure. We only absorb the technology.
Sure. And do you see still a scope to have different assembly plants, one for next charge and the other one in Bangalore, or it might make sense to consolidate everything at one roof and get a scale benefit?
See, right now, of course, we have, had this share buyback arrangement, which we have done with, so we have taken the Leclanche shares, and now it's become a 100% subsidiary. So we have essentially right now 2 subsidiaries. One is the so-called Next Charge subsidiary, and the another one is the Exide Energy Solutions Limited, which is the bigger effort which is underway. So going forward, we will take a call how it pans out.
So related to that only, considering you had some challenges for accepting your Next Charge batteries, with the new regulations coming now in December and March for battery safety, have you received more acceptance for your product, or inquiries have gone up? You see more role for you to play for assembly now?
See, as I have told you, this concern has basically stemmed out of what? It has stemmed out of fires. Number of fires have taken place that you must have seen in the press. So this has suddenly raised the caution at all levels, both government and otherwise. So we have to understand why these fires have taken place. These fires have taken place because of lack of knowledge of this particular technology. One of the causes is that ill-designed modules and packs that can lead to fires. See, you have to understand one thing: these modules, they require sophisticated thermal engineering. This is not just tying up some batteries together and making some connections. This is a high technology area, even though it's called modules and packs. So that is one thing. Second thing is there is a lot of lack of information. For example, let me tell you, lithium-ion cells should never be transported in 100% charged condition. This is not well known. Normally, the recommendation is you should, transport at 30-35% level of charge. Now, once we are getting into a new area, obviously we learn as we go along, but some of these things can cause mishaps. So now, of course, people have woken up to this reality, and I'm sure the regulations will help to certainly streamline some of these concerns. As far as we are concerned, we were always ahead of the curve, and we, right from the beginning have taken all possible precautions to ensure that our products are safe and user-friendly.
Sure, sir. Thanks a lot.
Thank you. We have the next question from the line of Naveen Sahadev from Nuvama Securities. Please go ahead. So Sahadev, I have unmuted your line. Kindly proceed with your question. Sahadev, as the current participant is not answering, we move on to the next participant, and the question is from the line of Vaibhav Dutshi from JP Morgan. Please go ahead.
Yes, hi. Thanks for the opportunity. My first question is on the export side related to lead-acid batteries. Your share of exports has been rising over the past few years. So just wanted to understand what are your aspirations in these markets, and could this be an opportunity for pricing and ASP improvement?
Yes, exports present a very big opportunity for us because our products are accepted now all over the world. We are exporting to 60 countries globally, and to the first world in terms of one of our largest markets is Europe, US, the NECA region, Southeast Asia. So we are fairly well spread out, and in certain product categories like traction cells, we are the vendor of choice by the largest forklift manufacturer in Germany, which is Exide. So we are very well placed in this, and we are growing rapidly, and we see good prospects going ahead.
Got it. Thank you for that. And just a follow-up here, we have heard that EVs also have an auxiliary battery which required lead-acid content. So have you kind of started supplying those batteries also to the current electric vehicles that are in the market? Any thoughts on that?
We have a number of inquiries from various people to make the auxiliary battery. It's called the auxiliary battery. It's the battery which is required for your windows, power windows and wipers and so on and so forth. The main battery only drives the car. So yes, we are very much in this space, and we are, manufacturing these batteries, and there are a number of RFQs from various customers.
Got it. And my second question is on the lithium-ion space. So what we are seeing right now is that the cells are being sourced from, say, Korea, China, and then getting assembled by some of the OEMs themselves. But if I look at how strongly the government is focusing on localization content, if you were to include the battery cost, then localization content in an EV is quite low right now because of, obviously, the cells are being potent. So do you see regulations maybe changing in favor of domestic cell manufacturers, including yourself, over the medium term?
Yeah, I strongly believe so, because as I said, the value addition, again, generally speaking, is about 70% with the cell manufacturing and 30% with the module pack. So once that value comes within the country, I'm sure it will encourage other people also to get into it. And also, what is happening right now is it is motivating a lot of, upstream activity, in terms of anode, cathode, and cell manufacturers to look at India as a destination to manufacture their products, which become inputs for our cell manufacturing. So therefore, number one, it will surely encourage a lot of manufacturing activity, number one. Number two is that I think the government is actively encouraging this Make in India, Atmanirbhar concept. And once the industry gets going, I'm sure there will be a lot of encouragement from the government as well. And there is no reason as to why we should be not competitive.
Got it. Thank you so much. I'll come back in the queue.
Thank you. We have the next question from the line of Pramod Kumar from UBS Group. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. My first question is regarding your investments on the EV side. Can you just help us understand what is the kind of workforce we have which is dedicated to the lithium-ion project, and whether and for how long we've been having the lithium cell lab in-house in the company? Because that's again quite important. So if you can just help us understand this to begin with.
How many people? So people we have started taking, we have already completed the top tier recruitment, as I said earlier. And the N-1, N-2 recruitments are in place. So the team is working out of a makeshift office in Bangalore. As soon as the office is, the office space is ready in our site, they will move there. So we have very qualified people working, already who have started to work there.
So we are in a way in the build-up stage on the R&D side on the EV for the lithium battery project.
Yeah, so we have got, for example, we have recruited our CTO, so she's building the R&D this thing under her initially in terms of talent, and once the actual building comes up, the trial line and so on and so forth, all that is required for R&D, that will be set up. So we are well on our way to make a very, very modern and state-of-the-art plant in Bangalore.
And sir, on the lithium cell lab, do we have a cell lab in-house already?
No. We are going to make one. Lithium, as I said, lithium cell manufacturing, that entire project has just got the green signal in terms of the land from the government, and now the construction activity, Bhumi Puja, has just been done. So construction activity has started. So all the lab and other things will be set up there in that facility.
And so on the parallelly, are you already making investments on the BMS side, sir, for software development for the BMS, because you would want to be the integrated player, right?
That's the module pack, the BMS, that is what I was saying earlier, that has already been seeded with the next charge facility. So it's already we are well on that effort.
Okay. And have we commercialized that somewhere, sir? Because what we've seen in some of these BMSs which come from abroad, or technology which is sourced from abroad, haven't been exactly very impactful in India.
BMS has to be customized with the customer.
Absolutely.
It cannot be just a general BMS. It depends what the customer wants, what he's looking at, whether he wants us to do the BMS. Sometimes the customers do the BMS themselves.
Yes.
So there are lots of variants which are possible here. So whichever customer wants the BMS, we'll be happy to help them do it, or do it ourselves and sell it to them, whichever way they want.
And sir, you did talk about this state-of-the-art manufacturing facility which is coming up. By when will it be ready, sir? So that because it will be really interesting to come and see one of the first large plants which is being set up in India. So what is the expected timeline there, sir?
Timeline is 2024 towards basically 2024-25 financial year. If you look at it, it will be towards the later part, not towards the beginning of 24-25, but towards the later part. Full-scale production should start from 25-26 onwards. Because initially few months will go in stabilizing the production.
Fair enough, sir. Thanks a lot, and wish you all the best, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this would be the last question for today, which is from the line of Navin Sahadev from Nuvama Securities. Please go ahead.
Yeah, thank you for the opportunity. I had just one question. Is it possible to share the technical collaboration agreement terms with SVolt that we have? As in, you said they're going to help us set up the plant and also stabilize production in the initial phase. So are we the fee or the consultancy charges or the collaboration amount that there will be agreed, is it a percentage of sales or a fixed revenue to be paid to them, and over what period? That will be really helpful. Thank you.
So, to answer your question briefly, it is not possible for us to divulge the exact details of an agreement because it would breach the confidentiality clause. But overall, I can tell you it is a standard technology license agreement where there is an upfront payment and there is a royalty payout. So it is nothing out of the ordinary.
No, I get it. I get it. That's helpful. Thank you. Thank you so much, and all the very best.
Thank you.
Thank you. As that was the last question for today, I would now like to hand the conference over to the management for closing comments.
Thank you. I hope we have been able to answer all your questions satisfactorily. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. Thank you.
Thank you, sir. On behalf of Exide Industries, that concludes this conference. Thank you for joining us, and you may now disconnect.